you want to know what the day of an active trader looks like in Samuel & Co trading?
Hi, I'm Raj Singh. I've been with Samuel & Co trading for coming up to 8 years. Crazy to believe. My current role is I'm a trading coach at Samuel & Co trading. I have been for around about 5 years. So helping our traders to improve if they're struggling, just analysing their positions. As well as that, I'm also the head of recruitment. So I work with a team of headhunters to help ensure that we get the right traders to help us along the journey. Cool, so it's morning, just got to the office. Interestingly enough, my day pretty much started last night. I was watching cable, it had been plummeting for the last couple of days, just based on non-farm payroll, Fed interest rate and Bank of England interest rate last week. So yeah, I started seeing it to rebound off 120, where I'd been watching it for a little while to reach to take a buy. I saw it reject and pin bar then. But inevitably I wasn't awake at 12 to place the trade, so I went to sleep. I placed it this morning at about 7 when I was having breakfast at home. So yeah, my day technically started then. So it's a busy day today. It's back to back with trade reviews. Checking the international leads that are coming overnight, contracts that have been signed as well. So yeah, overly a busy day. So yeah, I've got to start right, keep the energy levels up. Let's see what today brings. Yeah, so generally when I get into the office, first thing I do is check my emails. I wasn't working yesterday, so you normally find you have a bit more of a build-up of emails to respond to. Yeah, so it's reaching out to our international applicants, processing their applications. So that's going to be part of today. It's also running through contracts as well. That'll be signed by individuals who are joining us, our most recent traders who have joined and are joining. As well, so it's going through that. Also today is an extra crazy day because we've actually got the junior trader program first day today, so it's checking on the attendance because I'm also going to be issuing their CPD certificates towards the end of the week, so just need to make sure obviously everyone's completed the whole part of technical analysis. So the junior trader program CPD approved and registered, it's equivalent to 64 CPD points. So at the end of the program they all get their certificates. That's something I need to start preparing for now as well. On top of that, my review, so a busy day. Okay, so this is the trade I was talking about earlier. I took this position at 7 a.m. this morning. Look, we saw cable come up and really test this level of resistance at 124.3. And I was waiting for the sell-off to around 120, so it's quite nice to see actually pin and reject off the daily chart, which was showing the rejection, especially after last week. When we had the Fed interest rate increase, we had Bank of England interest rate increase, we had unemployment figures off the US, and we also had non-farm payroll, so it was a crazy week. And we saw cable, really sell off. Almost around 400 pips in total. So 120 is quite a level of interest to me. So before Brexit, it never came that low, and since then it's only really broken 120 twice. And one was when the markets crashed during COVID, and the other one was when Liz Truss, bless her, and Kwasi Kwarteng wreaked havoc with their micro budget. And we did see cable actually come down here and really crash. The market actually dropped down to 103. But since then, markets have stabilised. It does seem better, and it has come back and it has tested. It has broken once about 119. So I went with a bit of a conservative stop loss, thinking if it does break it beyond my level of support, it probably will continue to the downside. At that point, I'll concede I was wrong. If not, potentially up to the upside, take it up to the top of the range, which will hopefully give me a nice 3 to 1. It was nice. I think at present it was up about 50 pips. It has rebounded a bit. It's currently sitting up around about 34 pips in profit at present. If I take a look at more or less risk to reward, my risk to the position is 120 pips, and my target is about 360. Let's see how this goes. Let's see how this trade pans out. You can see, before Brexit, since the pandemic, it's not really broken too much, as we can see. So, tracing that chart back, we see a very lot of strong rejections off this level, what we've seen here. We have seen consolidation at break recently, but again here we've seen it test similar levels. And again here in 2019, if we actually track that back a bit more, we'll see it's actually it's rejected again in 2016, 2017. This was one flash crash, like a 15-minute candle. So if we look at it, it's quite a strong level. So let's see how it goes.
It's in 2011 actually. I actually got into trading by, I don't know if you guys have ever seen a film or read a book called The Secret. But I got into it in 2011, and those of you who have will know that there's all this hype around it when you first get into it. Yeah, and one of the philosophers in there was a guy called Bob Proctor, and he was holding a wealth seminar in London. So I went down to the seminar, and you know, there was various different people talking about different career avenues. You know, there was a guy talking about buying and selling properties. There was a lady talking about becoming a motivational speaker. And this random guy just gets on stage and starts talking about trading. I had never even knew trading existed. I didn't know what it was or anything. But yeah, it sounded good. You know, that I could take a few £100 and become a millionaire in a few months. So me, like hundreds of other people, ran out with our credit cards to pay for this course. Yeah, it didn't go well. And as you can tell, I'm still not a millionaire. So yeah, I did stop trading, and then it wasn't for about 4 years after is when we were basically had family businesses at the time. So when we sold the business, thinking, you know, what do I want to do with my life? I did enjoy trading, you know, the short stints I had in it, but I knew there was so much more missing from it, because to give you an idea, when I signed up for that course, you know, I didn't even, the course was over a weekend, and I didn't even know that the markets were closed over the weekend. So it goes to show you that the experience I had. But yeah, then I started looking around at trading positions, you know, and I did see a few at the time. There wasn't a lot. And I came across Samuel & Co trading, and the first thing that stood out to me was that when I looked into the company backgrounds, it was the first time I took my hat off to someone that was younger than me. And I was thinking, wow, okay, this guy is, you know, if it's real what he's achieved, you know, it's quite incredible, especially for his age. And I think as well at that point, I didn't want to travel into central London. I live in Hertfordshire, and at that point we had a small base in Boreham Wood. So yeah, when I joined us, there was, when, you know, I applied, you know, I joined, you know, I came through the junior trader program. I remember the date, it was April 22nd, 2015, when I joined the company. Yeah, to cut a long story short, I was a terrible trader when I joined the company. Sam was not a happy bunny. I think on my first assessment week, I was down around 16%. Terrible, I know. But yeah, and you know, I continued for the company, you know, and I kept in good contact with Sam, you know, in between trading. I'd never met him before. I was saying, you know, do you have any jobs available? Are there any roles available? Yeah, I was quite persistent, and you know, he did say, you know, there is a small opening in the company. So when I joined, we were a team of around 5 of us. You know, it was Sam, Kathy, Adrian, Tom, and a guy called Justin. It was a real small company then. You know, it was a startup when we joined. You know, it had been established for a year or two, but I think this is when the growth really began. Yeah, so I joined then. There was no office. We literally worked from our bedrooms, at times on laptops, so no real difference from lockdown. It felt quite normal. So yeah, it was quite an epic journey then to see the company growth from then to, you know, 500 plus traders, taught thousands across the globe, to, you know, I've had bases in Madrid and Birmingham throughout the journey, you know, see training accredited algorithms come through, you know, office expansions every year in a row for 5 years has just been insane growth. So yeah, that's my journey with Samuel & Co. It's interesting because I think initially I wasn't taken to the market, I was taken to the lifestyle, and I was taken to the money. I didn't really know what I was doing the first time I started trading. And it was interesting when I did join Samuel & Co. and I went through the training, is when I realised how much I didn't know, you know, and how much I was just missold and stuff. And it was when I started to understand the market more, is when I probably started to actually enjoy it, when I started to actually understand how to read a chart. Sounds so basic, but I think I did start to enjoy it. Look, I'm not gonna lie, it wasn't just a smooth journey. The first 8 or 9 months here, I wasn't a good trader. I was struggling to find my feet, and I think that's the biggest problem that traders have to overcome, is finding what works for them. And just trying to work out what style worked for me. Like a lot of new traders, you just trade everything under the sun in every time frame, every strategy possible. And I think when I randomly came across trading the oil market, I just looked at it on a chart one day and I thought, okay, this could be okay. And I realized actually I'm okay with this. I loved the volatility of it. Like when it moves, it seriously moves. But I think why I took to it and why I really started to enjoy it was, before, when we had family businesses, we had retail businesses, and it's very basic, buying and selling, supply and demand. And I resonated that with oil because it moved very differently as well to currencies, supply, demand, and a lot of fundamentals. And I started to geek out on the fundamentals towards it, and as well as FX. So I'd say that's when I really started to enjoy the markets, when I found my feet.
This video is sponsored by Active Trades. They've got really tight spreads and fast trade execution in under 4 milliseconds. Be sure to check them out in the description and let me know what you think.
Okay, my biggest win in trading. Okay, I'm going to go with pip value. So it was actually about a week and a half ago. I took a short position on oil, and I closed it for over 1,000 pips. It was just over 1,000 pips. I think in terms of pip value, it was my best trade to date. And I think there was a lot of more satisfaction with this. So I don't know if you guys are aware, but Sam, he also does weekly lessons, and unfortunately he wasn't able to make one of them, so I covered one of the sessions for him. And in it, I actually broke down the trade as to why I was looking to sell the market, what I was looking for fundamentally. I'm just going to run you guys through it. So we all know from when Russia invaded Ukraine, we saw oil go through the roof. We can see, obviously prior to that, we can see, lockdown risk gone negative, it's recovered. We see it hit these highs of 125. We did start to see it come down, back up. There was a lot of uncertainty in the world, especially regarding inflation, interest rate decision. It was unpredictable what was happening in Ukraine. So we start to see these highs. We start to see the highs, and we start to see the market come down and start to gradually decline after it's come to the highs. And when we start to trace oil back to the 2008 crash, we saw similar. We saw it hit almost 150. We did start to see the market sell off again after. We see this level towards the bottom of 64. So between 64 and $65 is almost a reversion to means position. We could look at that from the very low to the very top, and how it did average prior to it. So it was a position that I was looking at and taking a sell position as to how the market's been performing recently. And when we start to look at that more, in the last 6 months, we see this huge decline in price in oil again still. And I think, when we look at more stability towards the market, was one of the reasons where I was more negative on the prices coming down. But I think as well, when we start to look at governments and how, especially in UK, US and throughout Europe, where governments are increasing interest rates to tackle inflation. A lot of the inflation was caused by the soaring price of oil. So much is made by oil. It's not just what fuels our cars, planes, which is big modes of transport for companies, delivering, which, naturally push the price up. But so many products like plastics, cosmetics, medicine, so many things, do have, do use oil. So I think with that heading towards cleaner energy, and also governments trying to tackle inflation, it's almost in some ways they're trying to tackle the cost of oil because it's a big driving factor of inflation. So, we started to see that, the decline, from June. So anyway, it's looking at how the market goes and how it behaves. And it was around this point where I looked to take the sell position. And
prior to that, there were two key fundamentals that were coming out that weekend. We had an OPEC minutes on Sunday, which it was expected that OPEC were actually going to cut production to increase the price of oil. And we started to see, since those rumours happened, that oil started to creep up. But this was also when we were looking at an embargo on Russian oil, where the EU, also the US and UK were looking to put a price cap at $60 a barrel. So they were the two factors where, which were going to make the impact. Initially I thought price was going to rally, but the interesting thing that happened was that Sunday, when OPEC had their minutes, they didn't actually come out and say they were going to cut production. They actually said we would stabilize the supply should the embargo be imposed. So in terms of how the market digests that, there may not be that shortage that we're expecting if they were looking at cutting production. So, I mean, what we saw the EU actually enforce the $60 a barrel. And interestingly enough, we saw the initial rally up. It didn't really hold the price. We started seeing it reject off these highs. So I looked to take a short position because the two major news impacts failed to create those highs that it may have done. So you can start to see the entry that I've taken off this level. Initially it did go negative for a few hours, rebounding again off that news. But I look to take the position here. You can see here where I've taken sell. I opened it on a Monday shortly after, and I closed it on a Friday. It's taken just over 1,000 pips. In terms of pip value, it has been the best trade I've taken. And it's interesting. I love the exit as well. I mean, it's actually rebounded about 500 pips since then as well. So yeah, there you have it.
My biggest loss. No one likes talking about this. Still hurts today because I'm still in it. So a little while after COVID, continuously watching stocks, and it was a great time to buy. So I was watching some mutual funds, and I hadn't really overly gotten into it. So I was watching the Bailey Clifford funds. They have quite a few of them. So there was a particular three I did a lot of research into. So when you look into funds, sometimes they have good years, sometimes they have bad years as well. So, I was looking into this fund, doing a lot of homework into it, and they hadn't had a down year for 6 years. And I was thinking, okay, it looks quite secure. Did all the research into it. I diversified across 3 of their funds, so it wasn't just on one pool. A lot of them was US based, but I looked into like the positive markets, so greener energy as well. Global Discovery Funds. I was quite convinced, thinking, okay, great. And the previous year, they grew around 70% on one of their funds on the year. So I was okay. I was biding my time, thinking, okay, let the market pull back a bit, let the market sell off a bit. And I also, to add to insult, I got my dad into trading stocks as well through lockdown. And he'd done well. So, when it was come to this fund, I was like, Dad, have you considered funds as well? And this is why this hurt so much. So, I gave it all the pump. So I put a reasonable amount into the fund. Do you know what? Initially, it was great. It went up about 12 to 13% within about 3 or 4 weeks. I remember my dad saying to me, "Yeah, these are really good funds you've picked out." I was like, "Yeah, amazing." And do you know what? The market just tanked, and at one point, I was down 60% on them. And it hurt because my dad put his money into it as well, and I was thinking, I'm a terrible son. I'm a terrible, terrible son. And to be fair, like one of them's only down 51% now. A couple of the others have rebounded. One's only down about 20%. Look, I still personally believe in them. I do think in the long term they will. I love trading stocks. I'd say the last 3 years, I'd probably be more stock based. For 8 years of trading, I'd probably say 6 of them has been more oil. That's what I've traded mostly. I really love trading it. It's when it moves, it moves. And FX wise, GBP USD is my favorite. I think obviously trading GBP, we get the data, we understand the economy better. It is very volatile, but there's times where it can frustrate you. I'd say as a trader, I'm definitely now more of a swing trader. Occasionally I do intraday trade. I'd say I traded the hour chart for most of my career. But I think, you know, as we adapt and evolve as traders, you know, I think I like the longer term aspect. Don't get me wrong, I'd rather get out as quick as possible, but you know, there's times where, you know, your position just runs, and you know, it's just the way it goes at times.
So today's pretty much been a review day. It's been back to back with trade reviews. So it's nice to just wind down and just take your eyes off the charts and my FX book. Yeah, I just generally just use it to catch up, actually look at my stock portfolio, just message back friends and family who may message me throughout the day. Just try to switch off, maybe check the Man United news as an avid fan. Yeah, and just get some lunch. I joke, it's just a cheese sandwich. I would have done that if that was egg mayo.
FX wise, I really only trade cable, so GBP against USD. I don't trade much FX outside of it. And so, yeah, I would definitely say I'm very conservative as a trader, also as an investor. You know, in stocks, apart from when I invested into Bailey Clifford. But look, it was a reckless. It was still calculated. It just hurts because it's negative. But yeah, you know, generally very conservative. Yeah, I think, you know, what I learned over the years is, you know, risk manage first. If the risk to reward is there, then great. If it's not, I generally don't take it. You know, just focus on your consistency. You know, everything else will follow. You know, educate yourself in the market. You know, forget signal providers. You know, if you're starting up, you know, maybe not rely on indicators, EAs, etc. You know, understand the market. You know, price action comes before everything else. You know, but I'd also say understand the fundamentals, and this is where I think so many traders fail. Is I just want to be a technical trader. You know, I just want to draw support and resistance, and I want to trade off it. But you need to understand the market. You know, technicals will take you so far, but I think to go that step further, it is about fundamentals. Understand what you're trading, and less is more. You know, I would, you know, so many new trades, and I did this as well. Was, you know, trading so many different pairs. I'd say the less you focus on, the more you'll understand it. You know, get yourself a good trade plan. You know, good education in the market. Yeah, and just be consistent throughout with entries, exit, risk management, trade management, the fundamental side, the technical side. You know, basically everything. No, I'd say in terms of stocks, I mean, look, it's no secret that the markets have been hammered. I mean, I'd say it is potentially entering a great time to buy. But I'd say be careful what you buy, diversify as much as you can. You know, do your fundamental research into the companies, you know, really find out things about debts, who's holding, you know, what institutions are holding them. Are there any big funds holding positions? Are they positive? Are they negative? You know, what's the potential projections of it? Because there's gonna be bankruptcies next year, you know, and it may surprise us sometimes who they are. You know, I mean, at the moment we see in the news where, you know, especially like small to mid-term, you know, builders and, you know, house builders are really struggling with the housing market slowdown. So, you know, don't put your eggs into one basket. I mean, there may be some great risk to rewards coming. You know, potentially a good time to buy, but you may also hold that position for some time, you know, before we see the full clear bull run. And I'd say the number one tip I would say is just put in what you're prepared to lose. You know, there's no guarantee you're ever going to make money from it. You know, if that's rainy day money, or if that's money to pay your mortgage, or they put your kids through college, then just don't do it. Like, it's, you know, just don't do it. Just, you know, if you can only spare £100, you know, and, you know, you're not going to miss it, or, you know, whatever it is that's relevant to you, you know, I'd say, yeah, you know, just diversify and just be careful.
It's my twin. Hi, Raj.
Hi, Atish.
How you doing?
But he just wants to be like me, and that's the reality of it.
It's my twin.
So, yeah.
So, just to make this for everyone, Raj, Atish.
Again?
Raj, Atish.
Good.
Beard, no beard. Young, old, handsome, ugly mofo. I'm joking. Oh, this guy.
So guys, thanks for watching. This video was brought to you by Active Trades. They've got their own intuitive platform called Active Trader, where you can trade highly competitive CFDs on global asset classes. Enjoy, guys. Make sure you thumbs up, comment, and subscribe.